Hello, hello, Mavericks. How's it going? It is Tuesday, June 14th, 2022. And compared to yesterday, today was a boring day. Now, it was not a boring day. At the end of the day, you look at the numbers and you say, oh, that was okay. S&P down a third of a percent. Crypto's down 1%. It was a pretty wild day when you take a look at everything intraday. Yesterday, we got absolutely killed. Markets down 3, 4, and 5%. Lots of panic. And so on a day like that, we typically get a Harami candle. And this wasn't quite a Harami candle. Let me quickly, in case you don't know what a Harami candle is. Harami is the Japanese word for expecting or pregnant. And typically when you get a big red candle, you're going to be able to basically draw these little lines and say, hey, you know what? The body of the candle's likely going to be in the middle of this and have some legs here, legs here. That's going to be a Harami. Now, we got pretty close to a Harami, but you can see here, it's like Harami week. We are down, not just at the bottom of yesterday's candle, but we even went below that. So we did have another down day. It's basically just showing you how weak this market is, that even after a 4 and 5% drop in one day and a 10% drop in 3 days, we're not seeing any real buying come into this market. Now, granted, we are one day before the FOMC meeting tomorrow. It is a big meeting. And I cannot remember a time in the last couple years where a Fed meeting has been a bigger deal than this one. So I want everybody to, first off, be excited. And second off, be a little bit terrified. All right. Now, what I mean by that is we expect big moves tomorrow. And we expect big, wild swings, both up and down. And we'll talk about this later, but I really think you want to be very, very cautious going into this meeting tomorrow. And I think you want to wait a good hour, hour and a half after the meeting before you put on trades. I think that hour, hour and a half after the Fed statement at 2 p.m. tomorrow is going to be very treacherous. I think both long and shorts are likely to get stopped out. I think the best thing to do is just sit back, wait. There's going to be a big move. You don't need to get all of it. You just need to get a piece of it. The World Total Index did about as well as the S&P today, and you can see it's the same thing. We're trading in the bottom third of that and even a little bit lower. We take a look at cryptos, it's ugly. Now look, we have been as bearish as you can possibly get on an asset class. I've used words like they're bottomless. I've used words like they're crashing. We've been talking about this for the last 2 to 3 months. There is no bottom in sight in cryptos. That being said, we sure are seeing a little bit of bottoming action. Now look, I am definitely not sticking my neck out. I'm not saying that this is the bottom for anything because they are bottomless. And right now, there's some serious problems in crypto land. One of the biggest problems is that a major brokerage house froze withdrawals. What that means is the money's gone. It means that people deposited their cryptocurrencies with this company. They lent it out to other people. Those people lost it. And now the company is saying, we don't have the money anymore. This is so bad for cryptocurrency. Don't you remember cryptocurrency was supposed to be the safe place where you put your money because it wasn't run by a government? Governments just couldn't print more of it. Well, guess what? It's not all that safe. And so there is a complete rethinking of cryptocurrency in everyone's mind. And a lot of people who were buying into Bitcoin and saying, hey, I think it's a thing, they finally got in and now they're back to, you know what, it's probably going to zero. So there's a lot of risk out there, but I know the but just cancels out everything I just said. Today's action is definitely some bottoming price action. The biggest thing is the huge volume. I mean, just the enormous volumes that we got yesterday. Absolutely huge volumes. And look, the last time we saw big volumes was back here, May 12th. And you can see that was a short-term bottom. That was a short-term bottom. That is literally all I'm calling for. And it wasn't even that much of a bottom. It was just a stop going down. we're probably at one of those points where we probably are going to stop going down. If we can get a green candle tomorrow, it'll look a little bit better. But look, it's just now, it's no longer short territory in cryptos. For very, very nimble traders, and I hope that's not any of our traders who think they can run out into the street, into the highway, and grab a few nickels, there could be a little bit of a bounce here in cryptos. But stay away. There is so many good trades out there. You don't need to be in crypto. There's so many good things out there. So we are at a -3 on the equity markets. We are as bearish as we could possibly get. That being said, we just had an 11% drop over 4 days. There's typically going to be a base or a bounce off of that. Going into tomorrow's meeting, I think there's actually more risk to the upside. I think there's more risk that the FOMC make the market rally. Even though they're supposed to raise 50 basis points, I think the market has already discounted the news. I think the market said, we'll go ahead and reprice the bad news that the Fed's going to deliver to us tomorrow. It's the old buy the rumor, sell the news, or sell the rumor, buy the news. We'll talk about that tomorrow. I know we're doing a preview about the FOMC meeting tomorrow. We'll send that out on video if you weren't able to join us live. And we'll also be meeting tomorrow live during the FOMC press conference. So we'll cover that in detail. But as I said, I think that where the market is, I actually think there's more risk of being short than being long for the first time in a while. That's really what I am thinking going into this meeting. Let's take a look at the schedule here. So we've got the FOMC tomorrow. The big question is 50 basis points or 75. Most people are still saying it's 50. A couple of people are saying it's 75. It doesn't really matter. The market has already priced in significantly higher interest rates over the next year. After that, we have the Aussie employment change. If you were saying to yourself, hey, I want to play some news tomorrow, but I don't want to mess around with the FOMC, then just wait and play the Aussie employment change. Also, Thursday morning, we've got 2 more central banks. We've got the Swiss National Bank comes out. There is no change expected. Remember, about a month ago, the president of the S&B, Jordan, he actually sparked the Swiss franc for a little bit of a rally. I usually tell people you can sleep through the S&B policy statements. I'm actually going to set an alarm and at least wake up for it, and so I know what's going on. But I'm not looking to make a trade on it. Most of the time you can sleep through this one. This one's only 4 times a year. I think there may be some fireworks here. And then we've got the Bank of England. The pound has been very, very weak. Estimates are they only raise a quarter, which is so much slower than all the other central banks, which is why we've seen the pound weak. I think the pound is also setting up for a potential buy the rumor, sell the news / sell the rumor, buy the news, where I think the pound has gone down pretty significantly. I think there is more risk to the upside on that one than to the downside. And then, of course, we've got BOJ as well on Thursday. So 4 central banks this week is a busy, busy week. So let's get into the currencies and how they stand right here, right now. Yesterday, this is where Ankit had our currencies at the end of the day. Long dollar, long yen, short Aussie, short pound, short Kiwi. Okay, let's take a look. Let's take a look at what actually happened today in the markets here. So in crypto, we had Bitcoin, Bitcoin Cash, and Ethereum all down 2%. We had some of the smaller coins, Litecoin, Solana, Cardano up slightly. So a pretty mixed bag here on cryptos, which again is some bottoming action. The first thing that has to happen when things crash is they have to stop going down. That happened today, sort of. We'll have to see what happens tomorrow. In the foreign currencies, we liked the dollar long, and the dollar performed really well. And we liked the pound and Aussie and Kiwi short, and you can see they all went down. So my favorite trade of this week, over the weekend that I shared with you in the currency room, was short pound dollar. It's been a very, very nice trade, and it is probably time to look for the exit for that one. Other than that, yen was not as strong as we thought it was going to be, and the euro actually ended up being stronger than we thought it was going to be. So let's take a look at the charts. I'm not going to go over cryptos here because I don't want anyone to be trading them, so let's not even talk about them. Let's look first at dollar. So this here is our velocity chart. This is a 4-hour chart. We've got a 13-period EMA, we got RSI, and we've got a parabolic SAR on there. And everything is telling us it's going higher. So we did have this little high base that we had for 20 hours. We broke out of that high base, and you can see we're off to the races here. Look, I expect that this is going to be one of these that bases for 20 hours, runs for 8 or 10, bases for another 15, runs. There's no question that the dollar is in play on the long side. There's a lot more buyers than sellers. The yen was looking hopeful, but look, it just didn't go anywhere. It just didn't break out. It didn't run. We are now just basing here. When you think about this compared to the dollar was able to break out and run today, and the yen was not. So we just have to basically downgrade yen. It's not as strong as we thought it was going to be. Swiss franc was supposed to be right in the middle at a 0, and you can see that's basically what happened. These are the big things I want people to notice is when we get these big long upper shadows, these spikes, and then they just get sold right back down, it's telling you don't fall for breakouts. Don't fall for them. They've failed. Don't fall for them. You have to be more selective on these. So Swiss franc is still a 0 on velocity. And the euro has actually picked up a little bit. Now, I don't want to get too overly excited on euro because when you back the chart out, it looks like a big old mess. It doesn't look like there's been a lot of price action. This has not been a fast-moving currency at all. It's actually been very sluggish. And you can see here, we're generally moving higher, but on a very slow, erratic basis. Look, I see a chart like this and I say, why would I mess around with this when I can just be long dollar? Dollar is such an easier trade here. That being said, right here, right now, we are above the parabolic SAR. We've got a nice steepness to the 13 EMA. RSI looks okay. I'm going to give this a +2. It's the best we've looked at other than the dollar so far. But look, my opinion is you just play dollar. The pound looks terrible. The pound was a -2. This is a solid -3. We've got everything moving lower. And look, we just had a breakdown of a base. And we had a nice little run off that. We're probably setting up for another base. Or even possibly a little bear rally, maybe back up to the moving average. Somewhere up in here, up into the 149.30. This is the pound basket that we built. So as you can see here, we expect there to be some sideways action and then another fall potentially in the pound. So the pound is very negative here. Let's take a look at the CAD, Canadian dollar. You know, overall, it's in a nice uptrend, but you can see over the past, well, since June 8th, it's really gone nowhere. It had a move lower, and off that move lower, it hasn't gone anywhere. I'm going to need to see the CAD show me that it wants to play. Right now, I need to see a breakout above this. And again, we see the long upper shadows, so I don't want to fall for these breakouts. I don't want to fall for these false breakouts, meaning I'm probably going to have to be more discreet and discretionary on CAD. And really, until it breaks out of this level up here, I probably can't get all that bullish on it. So while I like CAD on the long side generally in its trend, right here, right now, it's just telling me, look, every time it tries to break out, it falls back down. I'd rather just sit in cash. Let's go to Aussie. Aussie is negative. We've got EMA falling. We do have parabolic SAR. It's underneath of SAR. But you can see the RSI is basically flattened out. So Aussie's gone from a -3 to the worst to a -2, which is still pretty terrible. And if we take a look at the Kiwi, Kiwi is basically doing the same thing, moving down slowly, just moving lower, having a bounce, moving lower. We're probably in for a base or a bounce here before moving lower. So if we take a look at everything all stacked up, let's see what the movements were. So the first thing to note is we had yen weakening. So we had the yen up at +3 and it just didn't really work. Look, it's not short. It's not bad. It just is basing right now. Until it stops basing, I think we just have to put it on the shelf. Euro moves up. It's not a currency I love. I'm not really looking at it. But if someone says, I don't want to play dollar, then euro is the next one up. And then basically the pound and the Aussie, they just switch sides. The pound became even weaker than the Aussie, even though the Aussie is still weak with the Kiwi. As you can see here, our trading pairs are actually pretty clear here. It's Aussie dollar short, Kiwi dollar short, and pound dollar short. If you want to get wild and you say, I don't want to trade dollar, you're going to have to go down to the euro, and then it's euro pound, euro Aussie, euro Kiwi. Let's take a look at some of these pairs and see if we can actually set up some potential trades. Now, typically, I'm pretty clear on these are the trades I want to take a look at over the next couple of hours. This time it is different. We are going into a Fed meeting. It is within 24 hours. If I'm going to make any trade, I need to make a trade that I'm in and out of before the Fed meeting. Now look, that's not my style. That's shorter term than I like to trade currencies. I like to be in the 1 to 2 day holding period. So when I'm going into this meeting, I'm saying, hey, I don't want to take any positions at all. And actually, I don't think anyone really wants to take any positions at all, because what happens before Fed meetings and major announcements is you have most of the people doing the same thing that I'm doing, waiting. Volatility dries up, volume dries up. We would get some really boring price action going into major announcements, and then that explosion afterwards. So I'm thinking if you're going to be in a trade, you want to be in a trade short term. And if that is the case, then the number one trade on the list is still pound dollar. It is still pound dollar. And you can see we've got a big fall. We had basically 16 hours of a base. We fell. And now we've got this doji here. Look, it's not ready to trade here. We just had a move down here with the doji. We'll have to see what happens. It could be another, let's call it 8 to 16 hours until this thing gives us another signal. And now we're really running right into the Fed meeting. So if you're looking to make a trade over the next 24 hours before the Fed meeting, then I think pound dollar is the one. You could also take a look at Aussie dollar. It's really the same story here. We just had a big fall. I shouldn't call it a big fall. 80 pips. That's actually quite a big move. That's a 1.2% move. We're definitely going to get some basing or bouncing here, just like we did off of this fall. We had, 8 hours where it went up. What you want to do is you want to get in off of the reversal candle if you're going to make a trade here before the Fed meeting. I am not making a Fed before the Fed meeting, so I am on a hold. I'm not going to make any trades until after the Fed meeting. Now, if you've never traded a Fed meeting before, or you're fairly new, the last couple Fed meetings, they've been volatile. They have been volatile, but we haven't had a crazy Fed meeting for really years. I think this one's going to be crazy. And I remember I learned a ton from Joe Jensen. I've been trading with Joe Jensen for over 20 years now. And we would always trade these Fed meetings. And we were so excited because there's always some big moves. And we'd get into the trade, and sometimes it'd work for us, and then sometimes it'd work against us. And I noticed that Joe would wait. He would wait until everything settled out and we were sweating bullets and we were like, oh, okay, it's going to work out now. That's when Joe got in, and we gave him the nickname, the lurker. The lurker is that he would wait for people to get into positions. They would feel a little bit of pain. And once they finally got out of pain, he decided to jump in and never felt the pain. I think that is what you want to be in this Fed meeting, the lurker. Now, typically what happens is you get 3 moves off of a Fed meeting. You get the initial move. So let's say that this is the equity markets going into the Fed meeting, and the Fed comes out and they say whatever they say, and boom, you get a big spike up. All right, there's typically 3 moves that happen in the 90 minutes after. You get the big move up, and then you get the huge retracement. All of a sudden, it reverses, and just goes the other way. And then you get the reversal and it goes back the other way. There's usually 3 big moves right on the announcement, the reversal of that announcement, and then the continuation. Now look, sometimes they go up, they go down, they base, and they drop. That's very possible. We could have, again, it goes down, bases, goes down again. Look, there's a whole number of different combinations, but basically you've got 3 big swings. You've got the first move, and then you either have the retracement of that move or a base of that move. And then you have, again, the continuation, whichever way it is. We have no idea which one of the 3 it's going to be. This is why I say I think it's very smart to just sit out, watch it, and then you basically want to catch that third move, whatever that third move is. So let me get rid of all this drawing here to where we can get back to just drawing one. So let's say we get this first move. Okay, we get the big move lower. And then the market rallies back up. So let's say this is, 60, 65 minutes after the announcement. So we've had 2 of the big moves. And then let's say the market kind of settles out in here. I think you want to get ready for, okay, if it goes back above the level it was before the announcement, I want to get in and buy. And maybe you pick a point down here. You want to sell. And you basically react to that third move. If you get that third move to the upside, go long. You get that third move to the downside, go short. I think you want to be a spectator for about 90 minutes and try to catch that third move that happens. So I'm going into the FOMC meeting neutral. I'm going to sit back and be a spectator. It's actually quite fun to sit back, be a spectator, watch all the craziness going on. And then, as Joe the Lurker did, comfortably, calmly walk in after the carnage is done and simply pick up the trade and feel no pain and pressure. Be a lurker tomorrow. Thanks for joining me. That is the Market Roundup. Goodbye, everyone.